Good morning, traders. Apologies for the delay, 15 minutes behind here. Um, just some issues. Let's get started. Happy Friday. It's the 17th of February, 2017. It's 8:15 a.m. Chicago time, 9:15 Eastern. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall um, the overall sentiment here overnight is again, we're in the same position we were in yesterday. The Russell leading the pack down 10 points since yesterday's close, down 73 basis points, followed by crude oil. The positives are the U.S. Treasury bond, the Eurobond, the Japanese yen, and those are safety instruments. And so the market stance is towards safety right now. The S&P is trading the lower end of yesterday's range. As we discussed yesterday at length, and yesterday's trader bite was very long, went into the details of why I expected the market to roll over, even though it rallied on Wednesday. And that drop came to fruition, not exactly as I'd anticipated. It was a little tough to trade early on, but we'll go over that a little bit here today. Um, what's on deck for the news today? We're just getting the U.S. leading index at 10 a.m. Eastern, and that's it. Let's take a quick look here and switch over to what was expected yesterday. Here's what was expected yesterday. The primary hypothesis is a continuation of the prior day's move up. The key reason is that the prior day finished near highs. The prior day finished near highs right here with a fair amount of energy beneath it. We expected that energy to be carried over into the overnight, but it pulled back. There was the overnight was non-directional, and we broke the expectations. We break higher and continue higher, but then pull back to the 2350 strike, which expires this morning here in 10 minutes for the Feb contract. Options contract expected it to just sit there, and that didn't quite work out. Here's the secondary hypothesis, which is more of what actually happened, except that the market did not even attempt to go higher. It didn't form a failure high in the morning, and it dipped straight down. But the rest of the day, if you cut this out, the rest of the day looks exactly like this. And I didn't anticipate the market would pull back a little bit with a rally into the close. So here's what it actually looked like in reality. Here we are. So the if you look back, the primary hypothesis is supposed to be chop, chop, chop. Finally, it gains its momentum to the upside, like we've seen, goes up, tests the high, the overnight high, reattempts an exit, and then pushes down, chops into the afternoon with a rally on the close. So what we got is we got all of that, except the morning, it just could not find the buyers early on. We ended up with a 6.25 point rotation, which is above 2 standard deviations as rotations go, with a 6 tick pullback limit. And so the interest is on the short side. The setups yesterday, a little bit of heat right there for an initial setup, which worked beautifully since it turned into a 10-point extension. That was the initial setup. The secondary setup was right there and right there. And I'll show you that really quick on the order flow and why this one was skipped. This one ended up working. And then the rally into the close was triggered across the board at approximately 129 Central, 229 Eastern. I'll show you on the U.S. indices, or the indices, the cash indices chart. I'll show you an across the board move that occurred right at the crude oil close that resulted, that kind of played with this rally up. This rally up was expected. The market has been rallying into the close for quite some time, and the expectation is that participants are likely to push higher. Incidentally, I had a meeting yesterday with some really good guys here in Chicago for an outfit that we know well, and it turns out they're one of the outfits that had to handle the that fund that was blowing out because they had to cover some options. They were, I guess, one of the outfits that handles their account, and confidentiality being as it is, they couldn't say much, but it appears to be true that there was a very large fund that had to clear out of some big positions, and had to buy the S&P. Their play is to sell a lot out of the money, sell a lot of calls out of the money, and those calls came into play and they had a huge delta exposure, and so they had to do a lot of buying this week. So it's interesting to see that unfold and to actually be on the inside and see and have people who are on the inside who see it happening in real time. Anyway, so here's what the setups look like since we're still in review. The key setup I want to talk about is push this push right here to 40 to 44 at 11 o'clock, and then again at 11:56. I'll show you what that looks like on the order flow for those, because I know this is an important one for a lot of people to try to understand. Again, let's see, let's reduce this. Okay, so here's the reason the original push to 44 was didn't quite set up. As the market was moving higher, we saw gray turn to white, so there were bigger offers, but it never really got solid. It never really consolidated enough to create a trigger. However, when on the retest higher, what we see here is as the market rolls up into that 45 area later that afternoon, you see this offer come in and you see the collisions taking place. There's a lot of sellers loading up early, and then you see the market roll up and the offer gets stronger and stronger and stronger. And then we get this nice rotation down for about 5 points on the sell-off. This is our last chance to take a stab at the mid on the second go, and so it resulted in this nice rotation down here, nice rotation down here um, in the early afternoon. The other thing I wanted to show you is look at what happens here. Look at what happens right here. If you can see the white line, you could see there's a shock there. The U.S. Treasury bond drops, the Japanese yen drops. Across the board, we get gold responding. We get you get crude poking higher, and it's the bottom for the biotechs, and then it results in this quick push up into the close. That was at 129 East Central, 229 Eastern, and the market starts rallying from there. But I just want to point out that the move up was supported across the board, and you can see a clearly defined line across multiple instruments, including the underlying equities in the S&P, or the predominant underlying equities in the S&P responding. The overnight session, I've definitely run out of time. The overnight session shows pretty much the same pattern as the day before. Look at the day before, pokes up high and rolls over. Over here, we attempt to push high and we roll over, and we're trading near lows. Okay, so the overnight session has been doing this, and here we are today. We have an impulse move down. A pullback didn't quite make it to the mid of the overnight session, and a continuation trade. It made a lower low here and is lingering near the low. A B-shaped profile. It looks like more selling is likely to be on the way today. Overnight inventory, however, is short in price and volume. So you could see from yesterday's close, which is where equilibrium would be on inventory, we have uh, a big move down. So inventory is likely to be short. And you can see in the delta how how volume got filled on this move down. You can see that's negative as well, negative 12,000, which is slightly heavy for an overnight session, as overnight sessions go, for it to push down to 12,000. It's well within one standard deviation, but it's on the high side of one standard deviation of all occurrences. Okay, so that's how things are shaping up. And just one last thing to review before we move on as we close out the week here. One last thing to review. Here's what we've done for the week. We've left this gap behind. We traded Monday the gold, and then the purple or whatever this color is. I'm not good with colors, purple or violet or whatever it is. I think it's purple. Is Tuesday, Wednesday, Thursday is green, Wednesday's red. So you can see that the market's one time framing up, except for Thursday. But Thursday continues the one time framing up because it did not make a lower low. And so the market is still in a positive stance. Most of the volume holding at 23.42, and we closed above that yesterday. The market still has some buyers in it. I just don't want you guys to think that, okay, it's starting to roll over, I better get short or build a short position or sell calls or something, which you may have to blow out of at some point like that funded. And so overall, the market's still trending higher. Okay, we're still one time framing higher. The bull market's still intact. Just a little bit of selling yesterday didn't really accomplish much. It's nice to see. It gives a little bit of hope there that the market is actually bi-directional. But yesterday we had an impulse move down, a push up, and a corrective. This became corrective here as it could not move lower, corrective, and it closed higher into the close. So we ended up taking this pivot here on the close. But right now, we're trading near the overnight low and yesterday's low. The overnight low is right on top of yesterday's low at 36.50 versus 36.75, and we're trading at 37 and a quarter. It looks a little heavy this morning. Coming in, the expectation for this morning is, as you would imagine, the expectation for this morning is a slight rebalancing of the overnight inventory. I'm looking for a pop up and then a push lower, and for the market to start squeezing down into that 23-26 area for a bounce and a return into the close. That is the most likely way the market's likely to play, or the most likely play of the day early on. Open auction, we get the inventory balance back into the value area low here, 23.40. Remember, this is a Gaussian profile. This is a balanced profile with value sitting right in the middle. So I'm looking for any push towards 23.50, excuse me, 23.50, that then shows me that there's, hang on one second, a push towards 23.50 that then shows me that there is in fact liquidity above in the 23.40 area that I can then lean against to sell. If the market lingers and continues to squeeze and squeeze and squeeze, then I'll close those and look for another area to get in. Otherwise, it may push back into the prior day's range. It may push back into the prior day's range, in which case hypo 1 is dead. So I'm looking for a push higher, for the market to fail lower as we go into the weekend, and then for later for it to reattempt to take back the range. That is hypo 1. Hypo 2 is just a continuation of what we have: open auction, drop, push lower, and then coming back in and then regaining balance, the balance that we had yesterday at 23.45. That would be hypo 2. So hypo 1 is looking for a push higher, drop, then rally. Hypo 2 is unable to find buyers, drops down into the 23.26 area, 23.26, 27 area from Tuesday right here, and then it starts to move back into the range, which then causes it to drift up like we've seen quite often, and the target would become 23.45, 20 from 23.26, 27. Okay, that's a long shot that we would rally that far on a Friday. Chances are we will do whatever we'll do today, and then we'll just go completely sideways, and the profile is probably going to look something like this. a P-shaped type profile is what I'm looking for. Again, the market has no real reason to continue to push lower. Anyway, I'll leave you with that. Good luck today, and I'll catch you tomorrow. Please hit the like button. It is like Friday. Please hit the like button on the way out. Take your time trading this morning. The market is here for a while, and you don't need to hurry. Take care.